Can Hyperliquid justify its valuation in the face of a Coinbase and Robinhood perp exchange that targets the wealthiest retail degens in the world, Americans?
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. June 14th was a special day for crypto. And no, we're not talking about Donald Trump's birthday. We're talking about ours. On June 14th, 2016, Unchained, the podcast, officially published its first ever episode. 9 years and close to 900 episodes later, we're still here. And just like crypto, we're not going anywhere anytime soon. With the launch of shows like The Chopping Block and Bits and Bips, and some other shows in the works, there's more coming around the corner. Here's to many more years being your no-hype resource for all things crypto. Do you want your crypto takes featured on Unchained? Drop your thoughts on the podcast. Today we have a listener comment responding to the latest stablecoins episode with Vicky Fu. On YouTube, Permaweave wrote, Circle is going to be one of the greatest short opportunities of 2025 once it tops. This is an IPO tale as old as time. The market starts by massively overhyping, and then the thing sells off until it's massively underhyped for an earnest attempt at fair price discovery. If you want your comment featured, write a review of the podcast overall, or leave a comment on our video on YouTube, Farcaster, or X. This is the June 17th, 2025 episode of Unchained. Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO Memo. Carefully consider the extreme risks associated with crypto before investing. One early Bitcoiner sold 30,000 BTC too soon, missing out on over $1 billion. Don't want to make the same mistake? With Xapo Bank, eligible members can get instant cash without selling their Bitcoin. Check out zapobank.com/unchained for more. Today's topic is Hyperliquid. Here to discuss are Arthur Hayes, CIO of Maelstrom, and Hanson Birringer, Head of U.S. Sales at Flowdesk. Welcome, Arthur and Hanson.
Thanks for having us.
Thanks to see you.
So Hyperliquid has been a DeFi/L1 juggernaut ever since its airdrop in November. The decentralized perpetual swap exchange now ranks 8th of all Bitcoin futures exchanges, according to CoinGlass. And it's been lauded for having one of the only good airdrops in recent memory, and the price has actually been going up since then. It was done in a true fair launch style, so it's gotten praise for that. And then it was the center of attention when the pseudonymous trader James Wynn became the main character on the timeline, and I think longed Bitcoin up to $100 million, but then lost it all, ended up $13 million in the hole. And on top of that, the founder, Jeff Yan, has ended up in a tweeting and subtweeting war, I think, with CZ of Binance. And at the moment, we're also seeing that at least Binance and Bybit are backing new DEXes. And I don't know, maybe it seems that they're trying to take on Hyperliquid. So I actually want to start by asking Arthur, since you were the creator or one of the creators of perpetuals, I'd love to hear what your thoughts have been as you've been watching Hyperliquid's rise.
So I think the narrative that DEXes are going to take over the world has been something that we've been on the lookout for a very long time. And I think the first real perp DEX that caught everybody's attention was DYDX back in, it was like 2020, 2021. And I remember at the time, I think BitMEX Ventures had a chance to invest in it. We didn't. But probably a bad call at the time. But I think the DYDX price chart, if you take a look, it went up to something like $28 billion FDV, which is a massive number at the time, given like their trading volumes were pale in comparison, even at their height, to what Hyperliquid is doing today. But it just shows that the market understands that the future of perps trading is probably going to be on a decentralized platform. Now, the question is how long that takes. I don't think that's anytime soon. None of these platforms are easy, Hyperliquid included. Maybe, Hanson can elaborate on this, but like when I talk to my friends at DeFi hedge fund trading shops, are like, it's a fucking mess, right? What is this code? How does it work? We can't really get good, a handle on it. And then some people just say, fuck it, I'm trading on it. And some people say, I just can't handle these sort of execution and connectivity risks with Hyperliquid. But that being all said, the liquidity is there, the volumes are there. It is still quite difficult for an average retail user to use it, but they have probably, something like 20 or 30,000 active traders, which make them $1 billion in fees every year. So it goes to show there's very few people in crypto that generate literally all of the revenue for everyone. And I know that for a fact, given my ownership of BitMEX and so the distribution of how much money we make and from whom, it fits that there's 10 to 50,000 people that literally pay the bills for the entire ecosystem, from a trading perspective, and we're seeing that with Hyperliquid. So again, it's very exciting. I think the narrative fits. They've done a very, very good job in execution on not having any VC overhang, doing a fair launch, and then buying back, literally using, I think 95% of the revenue goes into a hype buyback. So they're doing all the right things, and which is why the token has been the best performing, probably new launch of this cycle.
Hanson, what have you been thinking?
Yeah, no, I think as a global trading firm in crypto, we obviously kind of I think saw the potential of Hyperliquid pre TGE as just a market maker in this space and started to take a look and play around and kind of get active in the ecosystem. Post TGE though, it's taken on I think a completely new narrative both in the broader ecosystem and industry, but also from like a client interest perspective. We're seeing a lot of hedge funds and institutions looking to get exposure, kind of echoing what Arthur was saying, not really maybe knowing how, or their custodian setup doesn't enable them to. So having to find different workaways, whether that's working with a firm like Flowdesk or other OTC desks in the space, to get that exposure, sometimes via derivatives contracts as well. But it's really like changed, I think, the game for the better. The lack of VCs, the buyback and burn, or not, sorry, not burn, but buyback revenue of the assistance fund. Arthur mentioned, they've already bought back, I think, like $360 million worth of hype, which is now worth, 750 million. On track to do multiples of that throughout the rest of the year. So it's really just like nothing we've ever seen before in crypto in this kind of open sourced on chain atmosphere, which is awesome to see.
And out of curiosity, Arthur, you mentioned DYDX, and obviously there's also been other perpetuals DEXes before. I wondered, what is it that, brought Hyperliquid kind of to the fore in a way that the previous perp DEXes kind of didn't manage to do? Do you think it's literally just all this stuff we talked about, like the fair launch and kind of the community aspect, or is there something else?
I mean, obviously, Jeff and his team are extremely talented engineers. I think they only have ten engineers, something insane, right? Their output is per engineer is better than anything I've ever seen from a exchange perspective. So there's that. But I think the key thing for retail, and I try to bang this on through the throats of my projects, is like make your retail users rich. Do right by them. And I think that the Hyperliquid team has done right by their users. They have given them a massive airdrop. Is predicated on trading flows. People understood how they could earn the token. They trusted that at some point they would get the token, and then they weren't disappointed by the amount of tokens that they received and the manner in which they received them, which I think a lot of projects let everyone down. We're going to have this points program, and then it comes out that just fucking around, and there's doing these OTC deals with somebody else, and then the retail feels like, well, I just got cheated. I was the reason why you are successful, and then you fucked me. And so I think Hyperliquid executed a perfectly done airdrop to TGE, this timeline and flow, and the retail users stuck around and they traded with them.
I'm going to agree with I think one of the maybe not most overlooked, but most important aspects is making your users, rich. You kind of have to have that community aspect and really that deep rooted sense of loyalty from your community, which I think Hyperliquid kind of hit, nail on head. We kind of saw a similar dynamic with Solana ecosystem kind of go through ups and downs. A lot of people in that ecosystem got very wealthy, and then they choose to stay there and kind of participate in that ecosystem. And so we're starting to see now the hyper EVM kind of coming to fruition. There's billions of TVL, a lot of great products coming to market there, and you're seeing this exact same kind of network effect of these users who receive large airdrops. They're never going to trade probably anywhere else because they're super loyal to the hypercore product, but B, they're going to then take that capital that was airdropped to them and keep it within the Hyperliquid EVM ecosystem as new products like Felix and Hyperlend and Hyperdrive come to market, and give them things to do and make their capital productive. So we're super excited for that, and continue to see the build out of the ecosystem itself.
And I'd be curious just to know for either of you, do you think that if Hyperliquid had launched as an L2 instead of an L1, that we would still say, and everything else stayed the same. Like, do you think any part of the story would be different, or do you feel like it actually doesn't matter whether it's an L2, like for instance on Ethereum, or its own L1?
I mean, I guess it's kind of a hybrid, right? Because you're still that connection to the EVM, and you're still connecting MetaMask and go to the Arbitrum and some other things that get there. So kind of think it doesn't really matter. It's a layer something, and people give a higher price to earnings ratio to layer something versus a DEX, right? I think, when I initially looked at the $3 offering at the initial TG, I was like, oh, this is pretty expensive for a DEX given the volumes that they were doing at the time, and couldn't really buy into it. And then one of the youngins at Maelstrom was like, no, you got to look at it like a layer something. That's don't worry about the price or whatever. This is the next Solana of this cycle, blah, blah, blah. Okay, that makes a lot of sense. And so then it aped into some. I think it's all about mindset. Again, people are willing to give you a higher valuation if you're an L something because you have clients. And most of these L somethings have no clients. They have a big valuation like Chain, no fucking clients. And so I think Hyperliquid stands out in that respect in that they brought the clients and now they're getting the L something multiple.
Yeah, I think a lot of the pre-TGE consensus, it was pretty split, I would say, even amongst, I would say very sophisticated kind of crypto traders. One of our clients actually told me to get a grip when I suggested that this thing might trade to 20, 30 billion FTV. And now today we're at 45 billion. So I think it's just funny to see the narrative still around Hyperliquid's pretty. I would not say it's consensus trade, right? There's only 10,000 users in the EVM, which is probably a bit inflated due to people farming with their wallets. A lot of custodians still have yet to support it. The tier one, centralized exchanges haven't listed spot. There's still a lot of catalysts in its pipeline. But to answer your question, Laura, I don't really think it matters, candidly, because of, this revenue buyback. Whether it's an L1, an L2, an L3, an L something, like at its core, Hypercore makes a lot of money. And at the moment, they're using that money to buy back the token and kind of drive back value to shareholders that way. So I think the market is pricing in continued growth and capture of that SexDex market share from a percentage basis. They've already pretty much won the on-chain perp wars. It's now kind of setting their targets on some of these like tier 3, tier 2, eventually tier 1 centralized perp exchange venues.
Yeah. And just to explain what Arthur mentioned, I guess it's the bridge is on Arbitrum, and that's what's holding all the money that everybody's trading with. So, well, okay, so now let's talk about the biggest thing about Hyperliquid that's generated the most discussion, which is the fact that the trades are transparent. And obviously, this isn't something that's particular to Hyperliquid because, as we mentioned, there were others previously like DYDX, which is still around, where it's also transparent. But I was so curious, Hanson, since you are a market maker, like, how would you do your work differently, or do you do your work differently when you're on an exchange where other traders can see every resting order, they can see the wallet it's linked to, they can see the P&L, they can see the liquidation level? Like, what are the things that you do on a centralized exchange where positions and all of that information is concealed, and what do you do on something like Hyperliquid?
Yeah. So long and short answer, I would say short answer, not much different. There's obviously different like technical integrations when you're talking about like an on-chain, just from a latency perspective, when you're trading and kind of hooking up your trading infrastructure tech stack versus a centralized venue, co-location, and things like that. But from a more like, I would say, manual input into the trading systems. Like when we see James Wynn has $1 billion position that's 50 bips away from liquidation, you might step in and put in some stink bids there to kind of catch that liquidation wick, so to speak, which have historically been quite attractive on like a revenue producing perspective on Hyperliquid specifically. That's been a pretty good strategy, especially in the early days. It's gotten a lot more, I would say, competitive these days. But so I guess to answer your question, it's a pretty similar setup with some slight nuances because you can have a lot more information, historically, and this has been kind of debated on, crypto Twitter and whatnot. A lot of these exchanges have had like either an internal desk or you have like a private, designated market making program, which, Flowdesk, we do operate in those. It's part of our business model where we're hired to step in for those liquidations, and so they don't hit the order book. People bid on them privately, and then whatever's left over goes to the order book to reduce that slippage. So it's just a slightly different business model because they are an on-chain DEX versus the off-chain centralized equivalents. But more or less, it's relatively the same framework.
Oh, so actually the transparency doesn't, like, you don't, just all this discussion about like how it's a disadvantage or whatever, you actually aren't trying to, for instance, like avoid being hunted or something like that.
So for what we do as a firm, we don't take directional exposure. So we're never going to be punting $1 billion of delta as a market maker. We actually, that information is valuable to firms like us. You can definitely, like, when you see a big trade like that, come to the order books, you might widen out, for example. But I don't think that's necessarily like a predatory act. I think people are using and continue to still use Hyperliquid for many different reasons, and this ethos of it's all transparent, it's on chain. That's why a lot of people get into crypto to begin with. So I think it's definitely a net positive for the space to have this type of product exist.
And Arthur, have you been trading on Hyperliquid? And if so, like, are you changing how you're trading there because of the transparency or not?
No, I don't trade on Hyperliquid.
Oh,
Or
what about
to be honest, I don't trade anywhere really. I guess trade OTC. I'm a Flowdesk client, happy client. But yeah, I do all my trading over the counter.
Oh, of course, that makes sense. That makes sense because you're a whale. Okay. You're one of the few 10,000 or whatever that's keeping the industry afloat.
They
Okay.
kept me
So,
afloat. So
well, so I'd like to zoom out more and talk about this transparency aspect because, during this whole James Wynn saga, I guess, he put in initially $20 million. He borrowed money to be able to trade 40x what he had initially invested. The holdings rose to 100 million. Then he didn't sell, and instead he ended up in the hole at 13 million, which I mentioned before. Um, Toward the end, he was even soliciting donations on X, and I checked his account today. It said that he had $11 in it. So, so what were you guys thinking as you were watching all that play out? Because I was having some thoughts about like some direction that this combination of almost like social media and finance was going. But I don't know, like, is that too? Yeah, I don't know. Like, what I'm trying to look for is kind of like a cultural commentary about what this says about what the future is that crypto could be building.
I mean, I think he farmed the airdrop. I don't think he took $1 billion of delta on Bitcoin, just because if that was what you were doing, you wouldn't be doing it like that and posting it on social media, letting everybody know here's where you can hunt me and destroy my position. Like, I'm sorry, I think it's just a farm. Very, very well executed one. I'm sure he's gonna get a fuck ton of hype tokens. I'm sure he probably didn't lose money. He probably has another account that's either on another exchange, or he split it off a bunch of different wallets on Hyperliquid, and he's delta neutral, and maybe he lost a little bit on trading fees, but he thinks he's going to make it all back on the amount of hype tokens he gets in the upcoming airdrop.
Yeah, I don't know. It's a hard one. I can see both sides of the coin. So, like, it's really hard to fathom somebody just degenerously gambling $100 million, up and down. Um, so that a lot of people then agree with Arthur that, like, hey, he was just farming, he's offsetting positions, he's delta neutral, or he's kind of trying to like get capital in and out of an order book somehow. I don't have a strong view one way or the other. I think there is, some other social element here of he probably got huge ego tripping, was like in the, he was the main character of crypto Twitter for that week and a half period. And just kind of, I think a lot of people in the space have been in that situation where you're like over trading and kind of going off tilt, but like he took it to the extreme. I guess to answer your question about like the social phenomenon, I think we'll see more of this. I don't think this was the last, leaderboard style trader kind of going off the deep end. Because everything is so public, you definitely get like this elevated, sense of importance when you are like the number one leaderboard. And actually with Hyperliquid, you can't fake it, right? So a lot of people, crypto Twitter, KOLs, whatever, they'll post a P&L screenshot. It could just be completely fake, on Binance, OKX, or Bybit. But on Hyperliquid, it's actually real because you can go check the chain. So I think we'll start to see more, of these types of, I guess, I'll call him a KOL. I don't know what else to call him right now. Using Hyperliquid to promote their, trading group or kind of just trading strategies, and the vaults haven't really taken off, but I do think that's going to start to take off. I think the team is coming out with some new improvements and tweaks to the vault product within Hyperliquid's UI. And off the back of that, I would assume that we'll start to see more capital flow to those from like leading traders on the leaderboard, kind of managing other people's capital through those products.
Yeah, I saw a lot of people saying that they thought it was his way of promoting his moon pig thing. So that was one theory. But in terms of what you said about how you can't fake it, I don't know if you guys saw Andrew Tate posted his Hyperliquid referral link and said he was up 138%, and someone found his address, found he had actually lost $600,000, so he deleted his tweet, which I thought was
Yeah.
hilarious.
I think, yeah, that's the one thing you don't want to bet against is on-chain sleuths in the crypto.
Yeah.
They'll always find you, find what's actually going on, which is great, right? That's the whole transparency of blockchain, which it powers.
Yeah. So I did also want to ask, just do you think it's a different type of trader that's trading on these decentralized perps exchanges? Like, or do you think everybody's trading everywhere? Or yeah, just so actually, out of curiosity, so Arthur, when you said it's like the same 10,000 people that are making up the majority of the trades, but then you were saying, oh well, you're not actually trading on any of these venues. So like, what size of whale, if that's a way to think about it, are in that active group? Like, yeah, I'm just curious to understand. Like, is this a different group that's on this kind of platform or not?
So, I mean, I think I would say there's probably, let's call it 100,000 traders in all the world who literally pay for 80 to 90% of all revenue at all sexes and dexes. Um, and maybe they're just directional traders, your South Korean punter. Maybe they're arbitrage guys. Maybe there's some high frequency shops, all these types of things. But there's very few people in crypto who spend enough money to basically pay the bills for the entire ecosystem. Especially when you talk about derivatives, I'm not talking about spot and all that other stuff. So when it comes to Hyperliquid and you look at their active addresses trading and it's something in like 20 to 30,000, that tracks because if you are in a location where you can't trade on a centralized exchange for whatever reason, Hyperliquid's where you're going. Which obviously, the one issue, well, not issue, the one problem that I see potentially with the valuation and the multiple is what happens when Coinbase and Robinhood launch their perps sometime this summer in the United States. How many of those 20 to 30,000 people are Americans who couldn't trade perps anywhere else, and Hyperliquid's their thing? And now there's an easier option that's, direct. They can, wire money straight from the bank account and start trading perps. Maybe they're not going to get 100x leverage and it's going to be lower, but it's going to be much easier than dealing with all the intricacies of an on-chain trading venue. So I think that is the real short-term question. Can Hyperliquid justify its valuation in the face of a Coinbase and Robinhood perp exchange that targets the wealthiest retail degens in the world, Americans? I don't know the answer to that question. We'll find out.
Yeah, although I could see it being some kind of Venn diagram where there's the circle of people who just prefer to have a no KYC DEX, and then the circle of people who, for ease of use, they don't mind doing KYC. And there's probably some overlap of people who, are kind of in both categories, but maybe, yeah, whoever
Sure, for sure. I'm not
Coinbase
saying that
picks
Hyperliquid
off
is
is,
not going to
yeah.
make money. The question is, do you pay 100 times earnings or 200 times earnings? Right? It's a multiple thing, right? And so you can still make Hyperliquid can still double revenue, but the valuation drops by half. You've made no money on the token. So that's as a trader, that's what I care about. I don't give a fuck about the actual resorts. What are you going to pay me for the future? And how did that future change based on new information? That's what I'm trading.
I think Coinbase announced that, at their summit this past week. I guess my initial take on it is probably a bit more positive than other people's reactions. I think that the maybe Hyperliquid's percentage of the pie gets smaller, but I think the pie overall gets much, much bigger over the next, 5, 10, 20, 30 years. Hyperliquid has a benefit of not needing users to trade via them directly on the UI. They have their builder codes. They have HIP3 coming out. They have a lot of, I would say, untapped potential of just being that liquidity layer for a lot of other applications in the world as perps grow their market share as a financial instrument, bleeding into TradFi's dominance from options. I think it's a very, very, short-term possibility that we're going to see like tokenized perps trading on different tokenized equities trading on Hyperliquid front ends. Unit protocol that's just kind of doing the canonical spot assets for the Hyperliquid protocol itself. When I was messing around in testnet, some sleuths found that out, on Twitter last week for doing ES and NQ perps with 20x leverage. That is something that the Hyperliquid core team doesn't need to build themselves. They just kind of build this like tech stack for other people to plug into and grow the total addressable market, which is super exciting because I think a lot of people in crypto got into it to have this 24/7 style trading. They want to be able to trade anything on chain permissionlessly. It's just a different type of user. I definitely agree with Arthur that you will have some drop off of traders who just prefer to wire their Coinbase or Robinhood account and trade there and have it all with everything else they're doing. Maybe just from like a tax reconciliation accounting perspective. But I think the net added new user of perpetuals as an asset class growing with this kind of stamp of approval from firms like that and bringing it to the US under proper regulations just means the pie is going to get much bigger. So if their percentage grows smaller, I still think their revenues can grow.
Yeah, yeah, totally agree. It definitely feels like this whole area is just about to explode. I did want to ask also about Jeff's long post. Well, he has two actually on X, talking about transparency, and his first one said, very strongly, like transparency results in better execution for whales compared to on private venues. And the comparison he made was ETFs. He was saying, like, even leverage ETFs that have to be rebalanced daily, they choose to do so in the closing auction of exchanges. And he argued their positions are known, the trading strategy is known, which he said isn't the case for whales and Hyperliquid because they can trade however they want. And these ETFs do so at a very predictable time, whereas whales, they can trade at any time. But he's saying, ETF managers still opt for these more transparent auctions. And he said, number one, a transparent venue does not lead to more front running than private venues. Rather, traders with consistently negative short-term markouts benefit by broadcasting their auto-corrected flow directly to the market. And number two, liquidations and stops are not hunted on transparent venues more than on private venues. Attempts to push the price on a transparent venue are met with counterparties more confident to take the mean reversion trade. If a trader wants to trade massive size, one of the best things to do is tell the world beforehand. So what do you think? Do you agree or did you disagree with his position?
I have no fucking idea. I mean, I think Caroline Ellison might disagree with the broadcasting your size beforehand leads to better results. Because she ultimately destroyed the exchange by telling CD to hit her at $22. So
Yeah.
I'm not sure that empirically bears out.
Yeah, it's a hard question because I don't think any two situations will be alike. I guess go into the ETF. So Flowdesk, we're one of the liquidity providers for Grayscale. I could say that we're in like the SEC filing docs. So we've been, how those trades have worked is Grayscale gets a trade from one of the APs. They have a redemption or creation of GBTC, for example. They'll go out to their liquidity providers, Flowdesk being one of them, and get a bid going into the XPX print, which is basically like 4 p.m. Eastern across a syndication. It's an unknown formula, but basically like volume weighted across like 6 different U.S. exchanges. So we'll know on any given day, hey, we have to go buy or sell, let's call it 500 Bitcoin going into that print. So there definitely is, I would say, a positive of that order being public. into the close of like everyone knows that ETFs are rebalancing. BlackRock does 3 to 4 p.m., Grayscale does 4 p.m. on the dot. A lot of trading happens in that final 60 seconds, call it. And so people who are looking to buy or sell will typically get active into that print. So I think that is a positive thing. I think a negative thing of like James Wynn example or James Wynn's situation, for example, would be his liquidation levels being broadcasted publicly, and someone trying to go hunt it. I think also the caveat is it's very difficult to move Bitcoin like 3 to 4%. Like it's like a pretty you'd have to have a lot of capital to do that, and it can't just be on Hyperliquid, right? You have to move the entire global market, and I think Bitcoin's just too big of an asset right now for any one person to do that.
I think obviously it's a bit rich coming from him, given what happened with the jelly issue, which was some illiquid shitcoin that he decided to list and didn't really have the proper margin policies against it. And so, yeah, maybe that transparency wasn't really appreciated in that situation. But
Right.
if you have assets like Bitcoin, of course, you're not going to be able to push the price, a few percent just because just because you saw liquidation level.
Right. Agreed. Yeah, I think the jelly situation with HLP was, I think, a lot of lessons learned for both users of the protocol, depositors into HLP, and the team, changing the kind of standardization and kind of different metrics that HLP can take over, and different levels of leverage on the platform itself too.
Yeah, that is so true. I definitely agree that that particular incident, you could tell that they definitely probably were going to change how they did things going forward. Okay, so in a moment we're going to talk more about that, but first a quick word from the sponsors who make this show possible. Here's a podcast.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
Selling your Bitcoin just to get cash? One early Bitcoiner did and missed out on over $1 billion. With Xapo Bank, you can access up to $1 million instantly without selling a single sat. Eligible Xapo Bank members can borrow up to 40% of their Bitcoin's value. No stress, no selling, no buying back in. Use it for what matters most. Your dream home, your child's education, a getaway, or that can't-miss investment. With Bitcoin-backed loans, you're in control. Set your installments and repay in Bitcoin or US dollars, your choice. Enjoy competitive rates, zero fees, flexible terms, and no penalties for early repayment. And your Bitcoin stays safe, never rehypothecated, relent, or pooled. It's securely held until your loan is repaid. Check them out at zapobank.com/unchained. We have more listener comments about the hottest topic in crypto right now, stablecoins. On X, Bloody wrote, "They're just noticing that it's what stables was built for. We're so early here, not gonna lie. Don't you think so, Laura? But why are they creating new stables is my question." And also on X, Rain said, "Stablecoins as backbone, that could change everything fast." Again, if you want to hear your comment featured on the show, please write a review or leave a comment on an episode on YouTube, Farcaster, or X. Back to my conversation with Arthur and Hanson. So during that Jelly incident, when Binance listed the Jelly token, which they did like really quickly, assuming that the price rose, which, if you list on Binance is likely, then, and that, so the chain of events there would be the price rose, that would have caused the hyper liquidity provider to lose a lot of money. Did you take that as a moment when Binance was almost trying to like take down a rising competitor, or like how did you read those incidents or that chain of events?
I think you could definitely read it that way. I think it was Binance and OKX, right? Those are the two
Yeah.
simultaneously launched this jelly market.
Yeah.
CZ and Star don't like each other, so it's a very interesting coordination between those two folks. So I think it's maybe, possibly, you could definitely see a little bit of jealousy coming around. Here's this Hyperliquid guy, he's got 10 employees and he's generating way more money than us. So maybe.
Yeah, I think that sequence of events was I don't want to say predatory, but like maybe advantageous is a better word. I'm just looking back at the chart here. Jelly Jelly was 8 million market cap. I think HLP took on the bad debt around like 12 to 15 million, and then it went up to 50 million. This is also like classic crypto, right? Or like momentum traders, short squeeze, and then like just delta punters who are like seeing something happen. Like there was the MOB token on FTX that got super squeezed last cycle. When this stuff gets broadcasted and shared in Telegram chats, trading groups, discords, like it becomes a pretty well publicized trade. And then you saw the kind of OKX and Binance adding like fuel to the fire. Not spot listing, but like a perp listing, which we've seen, kind of the cycle be kind of the way the exchanges are going of just listing these like low cap tokens on, high leverage perps because they realize that also this is what people want to trade. It's been like the total mind share this cycle of these, mid to high cap meme coins on perps. That's been the money driver. And so I think they also saw an opportunity to probably hurt HLP a little bit and they took it. But I obviously don't know for certain.
Yeah, and then it's hilarious that Hyperliquid resolved it in a way where they paid themselves a little bit of money. But anyway, one other thing actually that I was just thinking is, that kind of description that you had there about how once people knew about this, then they wanted to go in on that trade. Like just earlier for the discussion around where kind of SocialFi is going, it does feel like like that whole thing with the LA Vape cabal, kind of around like the Libra token and all that. And um, I never listened to one of their streams, but apparently on there, because Tarun Chitra was listening to one and talking about it on the shopping block, and he was saying like, oh, like on there, they're literally bragging like, oh, I lost 100K, I lost, whatever. And there is something, yeah, like with the James Wynn thing, I don't know, it sort of feels like, yeah, it's like bragging rights. And then around this like Jelly Jelly incident, it even reminds me of almost like people are going to hate me for this comparison. So just hold your fire. But it's a little bit like cancel culture or something where like this internet mob like gets into, they get into something and they all kind of want in on it or something like that. Does that make sense?
Yeah.
Well, people love
Go,
leaderboards, right? I don't think
yeah.
that's not new. Every sex has a leaderboard. We had one. We have one at BitMax and all the major exchange. We have chat groups where you can talk shit in the chat. Post your positions, post how big your stack is. All like it's tried and true internet culture. So the fact that it's made it on chain and now you can verifiably post your positions and people know that you're not lying. It's just another way to sort of brag in this online community and flex how much money you have by either how much you lost or how much you made.
Yeah. I think, the social trading, copy trading phenomenon has been totally accelerated through the use of like Telegram trading bots. Right, this cycle are a huge thing. A lot of PvP trade is an example. It's one of the larger, I would say, protocols built on top of Hyperliquid. You can trade Telegram or trade perps from a Telegram bot, on your phone or at your desk, and they have social trading, right? So you can see when your friends are buying or longing or getting liquidated. You can see on the chart like when their positions get stopped out, and all this sort of. And they have leaderboards like Arthur mentioned. People love that. They love that sense of like being important and like showing and kind of flexing both to the upside and unironically to the downside of like loss that they want to share. We see that with Wall Street bets and kind of the rise of Roaring Kitty and GME stuff a couple years ago. So I think this type of secular trend is only going to continue, and that's we're also seeing a lot of like venture capital going into social trading style companies, just because it is a fun thing that is capturing a lot of user attention and wallet share.
Okay, so just to go back to that Jelly Jelly incident, Arthur, I did see your tweet recently. Fam, do hype perp volumes flip Binance's this bull cycle? Discuss. So you must have tweeted that because you might have been thinking that it might happen. Yeah, I'd be interested to hear your thoughts.
I mean, could it happen? Possibly, likely to happen. Again, I think the big roadblock is how does hype volumes compare when you have a real competitor out of the US, Coinbase and Robinhood this summer? I don't know the answer to that question. Obviously I was long a lot of hype. I'm not long a lot of hype anymore, mainly because I had a trade plan. The trade plan was you exit when Coinbase and Robinhood, either one of them announced that they're going to do perps in the US. Because again, I don't know the multiple that this thing is going to trade at. Are they going to make a lot of fucking money? Yeah, they're going to make a lot of fucking money. That's not the point. We're trading multiples here as a trader. So that's the question. I think if there's a lot of cool things that they're working on, like the permissionless listing of perps, right? You stake some hype, you're able to launch as many markets as you want. I think that's absolutely amazing. If they're able to launch 24/7 Qs and spoos trading, amazing, right? Or 24/7 Tesla, Nvidia, and these are all user generated markets, and then anyone around the world can trade these things. If they're able to get those sorts of things going, then yeah, the sky is the limit, because these are things that Coinbase and Robinhood will not be doing, even in their home market of the United States. So again, I think there's a lot of bullish catalysts for hype. I do think there's this medium, short term question of like, okay, out of those 30,000 traders, now you got this easier way to trade. What happens? I don't know.
Hanson, did you want to add on to that? By the way, I don't know if you saw, but the Hyperliquid community is totally tracking all these stats. Like at the top of one of their dashboards, it shows already Hyperliquid perp volumes are at 21% of Bybits, 90% of OKXs, 10% of Binance's. Like they're definitely very interested in this. But yeah, I don't know where you think this is going, this competition.
No, I think I guess I kind of alluded to it before, but I think Hyperliquid I think now is 75-80% of like just on-chain decentralized perp market share. I think it's pretty clear they're the winner right now. I'm a personal, I guess, bet that they're going to continue to win the on-chain. I think the real competition then starts with these tier 2, tier 3, eventually tier 1 sexes that they're competing with. I do think that they have the benefit of being a bit more nimble from a regulatory perspective of what they can and can't do. And I think they're going to utilize or kind of outsource some of these more regulatory opaque things like the tokenized equity perps to builders like Arthur mentioned who are using HIP3 to stake hype, permissionlessly launch their own perp market, basically utilizing the hypercore liquidity for Bitcoin, ETH, and then kind of adding their own tailored bespoke contracts in a different UI, right? A different unified experience for the consumer. And just basically offering this as like liquidity as a service, basically, to anyone who wants to build a front end. You're starting to see builder codes have generated certain companies, tens of millions of income already. I think we'll start to see that continue to accelerate. PvP trade, like I mentioned, Axiom, which is a huge, on-chain trading bot in the Solana ecosystem, has implemented Hyperliquid front ends. I think we're really only starting to scratch the surface of, that liquidity layer thesis playing out.
So the last thing that I want to ask you about this competition is I'm sure that you saw CZ's post. He tweeted, given recent events, I think now might be a good time for someone to launch a dark pool perp DEX. And then he said, I've always been puzzled by the fact that everyone can see your orders in real time on a DEX. The problem is worse on a perp DEX where there are liquidations. And then he describes how, like on a normal AMM style DEX, you can be front run and be vulnerable to MEV style attacks. Then he says, for perps or futures, it's even more important to not let others know or see your orders. If they can see your liquidation point, they could try to push the market to liquidate you. Even if you get $1 billion, others can gang up on you. So he then, kind of promoted this idea of this on-chain dark pool style DEX with perps. Something that he said would either not show the order book or even better, not show the deposits into smart contracts at all. And he said this should be doable with ZK or similar encryptions. And then he invited people to pitch him for investment, which I took as another way of saying that, Binance doesn't want to be outcompeted by this rival, but instead he will invest in a rival to take on Hyperliquid. What did you think of that? Like, do you feel like CZ is worried about this, or and do you feel like a dark pool style DEX would kind of either take market share or cause, I guess, Hyperliquid to run for its money?
I mean, things change very quickly in the perp DEX game. I know from very visceral experience. So CZ should definitely be afraid. I'm sure he is. To the extent that if these guys with 10 people have 10% of his, I don't know if trading volume or OI, I'm not really sure which statistic they're 10% of, but have already, beat up on, very good exchanges like OKX and coming up on Bybit. So it makes sense. Whether or not a ZK enabled dark venue was really going to be the thing, I don't know, because at that point, why not just go right back to trade on the SEX? Because without the transparency, why go through all these other hand wavy things to reduce your ability to understand what's actually going on the platform? That's the whole point of the decentralized platform, is you can verify that it is what they say it is. The money's there. You're trading against a real address versus go back on a SEX, and maybe you're trading against the internal market making desk who's got faster latency. You're doing sort of funny things in the background. Again, you have a black box. Why complicate it with ZK and there's all those other bullshit? Just go back to trading on the SEX if that's what you really want.
Well, yeah, but this might be for people who don't want to do KYC.
Maybe.
I don't
I
know.
th-
Yeah, Hanson, do you also think it's
um,
not?
I agree with Arthur. I think, and I think a bigger point here is I think crypto, and I think people in crypto don't actually care about decentralization and privacy. It's like a pretty small It's a pretty small subset of people. What they do care about is like a permissionless experience that's like good. And I think Hyperliquid provides that for this type of user in the market we're talking about. Someone who wants to log in, whether on their phone or on a desktop, anywhere in the world basically, and trade Bitcoin on leverage. That's who you're targeting, and that's who they're targeting. And I think that person is caring about how easy is it to get money to this platform to do what I want to do, and then B, like not even really execution, but like just experience and like community around that product is more important. And so I think that CZ and kind of these other centralized exchanges are definitely maybe a little scared or just aware of Hyperliquid. If they're not, I don't think they're doing their job. Like Arthur mentioned, this space is very competitive, right? Even one or a little over 1% of market share is like 9 figures of revenue a year. It's a very lucrative business, exchanges and perpetual trading specifically. And so you're going to start to see more competition. We see a lot of perp DEXes get funded, almost every day in this space. And the reason is the TAM is just so big. But more importantly, like I do think there is an argument to be made that these exchanges should actually probably be buying hype to hedge their business over time. And that could be like by listing spot hype and then just taking the fees in kind and not selling it. I think that's a good strategy that more exchanges should be starting to think about in a pretty serious way.
And by that you mean just themselves enjoying the rise in the price of hype, or
It's not. I guess it's more so like you're naturally accruing equity in one of your fastest growing competitors, right?
I
I think
see.
in the early days of Binance, people who accumulated BNB because they saw the rise, they're probably A, pretty happy because of the price exposure, but B, it's not direct equity rights to Binance itself, but it's a pretty good proxy to their success in the space. So yeah, I think we'll in 5 years from now, I think we'll probably see a similar hindsight bias of, oh, I should have as an exchange started to accumulate or at least participate with hype, just because it is the fastest horse right now in that category.
Okay. Okay. I did want to ask about some of the concerns about Hyperliquid. The main one that I see people talk about a lot is the security issue. And there's, as far as I understand, two single points of failure. So for if either of these is compromised, then that's $2 billion of money in Hyperliquid that can be taken without Hyperliquid being able to stop the hackers. So one is the validating software, and the other is the bridge, which has a 304 multi-sig on Arbitrum on it. And that's, as we talked about, the smart contracts that holds all the funds. So are either of you concerned about these risks? And on top of that, I guess for Hanson, like how do you factor that in or think about it when you're trading on there?
Yes, concerned. Does it keep me up at night? No. I think right as a crypto native firm, we're comfortable, using DeFi protocols and platforms. If you're not, it's kind of like, why are you here? Not to be like rude, but like I think as a firm, we're like very comfortable operating on chain. We do a ton of stuff in DeFi. I think, worst case scenario, if the Arbitrum bridge did get hacked, it's centralized enough to where I think they would freeze the funds and Circle would step in to freeze the USDC for $2 billion if it gets exploited. Again, like I'm not a security expert, so this also isn't my domain of expertise. And so I am definitely placing a little bit of like faith and trust in the team that they've done their due diligence and work, which so far has proven to be a pretty good stance to take given their success and track record.
Arthur, is that something that concerns you?
Nah. I mean, again, Maelstrom's a DeFi shitcoin house. Like, if I was concerned about this shit, like Hyperliquid is probably on the better end of the spectrum of some of the dog shit that
Yeah,
I
I
anticipate
would
on it
agree.
on. So, like, I'm not worried.
Yeah, I think it's
Wow.
we see some firms in this space like getting their exposure through venues like KuCoin or some other venue. Like I would maybe prefer Hyperliquid exposure versus some of these offshore exchanges, purely because I can also like see where my funds are on chain, right? That's the kind of going back to our other conversation about like why use a ZK rollup DEX, just use a SEX at that point. Because the whole reason you're kind of operating on chain is you can actually see where the funds or proof of reserve, so to speak, are actually there.
Okay. Okay. Yeah. I mean, that's interesting. I guess. I guess it goes back to what you're saying. People don't necessarily care about decentralization, but I do
No one
think
cares.
certain
If they
people
cared about
do.
decentralization, they wouldn't own BNB, right? Oh, the BNB has this chain that you trade financial. It's fucking CZ's computer. No one. And I'm not to bash CZ, right? He knows exactly what he's doing. Oh, they say they want decentralization. No, they just run a really really fast, casino, and I can build that. Okay, cool. Let me make a bunch of money. There's BNB, right? Good on him. He's a good businessman. So
Yeah, I mean,
no one
I
gives a
do think
fuck.
there's like there's different kind of constituencies within crypto. And well, actually, I'd be curious. So, Arthur, you're in Asia, and Hanson and I are in the US. Do you think that like people in Asia care less about decentralization? This is like a hypothesis I have. Do you do you think that's true, or do you have an opinion on that?
I think that people want to invest in decentralization, but don't care what actually happened under the hood. So as long as you say you're decentralizing or decentralized, then you can receive my money. Am I actually going to investigate how the validators work, how the multisig work, who holds the keys, how are they rotated, do they do a proper signing event, all these sorts of things that you would think about if you actually were building one of these things and you cared about decentralization? No, the partner doesn't care. Oh, they said decentralization. Decentralization meant Bitcoin went from 0 to 3 trillion. Okay, I love decentralization. Bye now. That is all.
Wait, and
And that's not an Asian thing. That's not a American thing. That's just retail. Even institutions, no VCs give a fuck about decentralization either. Oh, decentralization, this went up from that to that. Okay, I like decentralization too. I'm investing in decentralization.
I feel like wherever Satoshi is, Satoshi's going to haunt our
I think
dreams
yeah.
at night.
I think if you want a decentralized product, it's Bitcoin. Bitcoin is a beautiful decentralized network. It's its own kind of class of asset at this point. I think the saying everyone has a plan until you get punched in the face is like everyone loves decentralization until there's a hack, and then who do you
Yeah.
go to? You go to the team and like, oh, freeze all the funds, right? We just saw what happened with Sui. They're not going to let some hacker steal $250 million if they have the means to let like stop them. It's just not going to happen.
Yeah, although like Thorchain let DPRK take, launder a bunch of funds. But anyway, so
Was it their
it
money though?
depends. Right. Well, oh my God,
That's
Arthur.
that's
There we
the
go.
that's you know if Thorchain was hacked itself, I think it would be a different story.
Yeah.
Yeah.
Oh my gosh. Okay, that's so depressing. But anyway, so let's now talk about some stuff that you guys have been alluding to throughout the episode. So Hyperliquid launched this Hyper EVM, which enables developers to build dApps on type of Hyperliquid, and we've seen like a little bit of this. There's like a lending protocol, HyperFun, which is this Telegram bot support. HyperSwap, which is a low slippage AMM. I don't know. What do you think could happen now that like there's this possibility? Like, where do you think this community that they've created and now this technological capability, where do you think this is going to go?
Well, I think they have clients, right? And at the end of the day, every single L something is competing for a very small set of people who actually do stuff on chain. Let's call it 100,000 people do something on chain versus the millions of people who have a crypto wallet, right? And so there's all these sorts of games that we all play, the Ponzi-nomics of tokens, to get you to do something on chain. And most of these L somethings have no clients, even after torching hundreds of millions of dollars of VC and retail funding. Whereas Hype comes with a dedicated community that's spending enough money to generate, $1 billion+ in fees per annum. And so now you're going to give them every single other DeFi application because they're invested, because they own the Hype token, they like the product, they like the way the team has shipped tech, and so they're going to use all these other different things. So they don't need to be different than a Uniswap or a Curve or whatever. Right? They just need to be on Hyperliquid. Hyperliquid has the clients. The clients are wedded to this platform because they've made a bunch of money and they've got Hype tokens. Therefore, these things do well. So, at Maelstrom, we're looking at some of these projects because, again, they have the clients, which most people don't have. They have to spend all their money to get the clients. Hype comes with that out of the box. So that's why it's exciting.
Yeah, I would say Flowdesk. We've also invested in some of these companies in the ecosystem. Back in I think Q3 of even before TGE, and the valuations that they were able to demand was candidly a bit higher than they might have deserved at the point, just because they were like Hyperliquid exposure through like a VC conduit, because there are no VCs for Hyperliquid, and some of these firms couldn't get any beta to crypto's number one product, unless they're just investing in the ecosystem. And we've seen that kind of, I think, come tenfold now, right? With the success of Hype itself, a lot of these projects are raising bigger rounds at higher valuations, also attracting, like Arthur said, like they have the user base, they don't need to go pay for it. It's actually a much different type of equation for like go to market and strategy of user acquisition, because you basically have this like cult of Hyperliquid maxis, who will only trade or kind of use your platform if you're supporting the Hyperliquid ethos, kind of decentralization and like kind of giving back revenue to the users. It's completely flipped, I think, the historical VC game on its head as well. A lot of those projects actually wouldn't take venture dollars; they only did angel rounds because they wanted to like stick to this like no VC Hyperliquid only ethos back last year.
And so, on a similar note, we have this HIP3 proposal, which will enable builder deployed perps. And I wondered, assuming that that goes through, how do you think that could change Hyperliquid and also the competition amongst these perp dexes? Like what do you think that future looks like if those are deployed?
I mean, that's the holy grail. That's the game. Because at the end of the day, you can say what you want about decentralization, but if Jeff and his team are making decisions on which perp to launch and when and all those sorts of things, then that's not you don't want to be in that space. You want to be like Uniswap. They don't decide what LP pools get listed. They just list because they have a permissionless protocol and you can, create what you want to create. So if you can do that for perps, and they're not the first ones to try this. If you do it for perps and you have this sort of liquidity mirroring from the Bitcoin and ETH order books and it works, and the margining rules, work at scale, who knows if that's going to, I'm not really an expert on how they're planning on margining these things or how they plan on separating the risk of any liquid user generated perp taking away from, the HLP position in the Bitcoin book, all these sorts of questions you have to answer. How margining works, I have no idea. But again, if they're able to do it, it's the holy grail. And then they can, defensively say, hey, we are a decentralized program. We don't do fuck all, right? We just build this tech. We don't launch the markets. We don't provide the liquidity. So don't talk to us, right? And we just collect fees. And then we pay them back by buying back the token. If they're able to actually execute on that, they'll be the number one exchange, period.
Yeah, I think that's the whole liquidity layer thesis that the team set out, and I think HIP3's in testnet. I think it's coming to mainnet in the next probably month or two, maybe a little bit longer. But then again, it's going to be up to builders in the ecosystem to take advantage of this product that the team has built for them, which I think is a stance they've taken since day one. Right, build this amazing product, focus on like what you're really good at, and then basically like bring all the users to it just because of natural attrition to the best product in the market, and then that's going to bring all the builders, kind of like we've been saying, because you have the clients in the ecosystem. They took the approach of we're going to build the best app and then an ecosystem will just grow around it, versus these other L1s are like we're going to build this chain and ecosystem and then try and bring the apps to it. So it's completely different style playbook, and I personally am super excited for like what the possibilities of HIP3 will enable. I kind of mentioned it before, but Unit Protocol is going to be launching tokenized stocks there pretty shortly. It seems like, just based on testnet activity through their own front end, and that's going to be interesting to see how it plays out, because it's not really competing with Hyperliquid. It's actually just growing to this like pie through builder codes and kind of revenue generation.
And out of curiosity, do you feel like HIP3 or builder deployed perps? Do you feel like that will change your business in any way, or or will it just give you more capabilities? Or
Um, no, I mean, because we're not an exchange. We just trade on them. Maybe there's a world one day where we have Flowdex or something. I don't know. I think that'd be pretty cool. I think that's a long way off and not really part of our business model at the moment. But HIP3 does enable, right, that kind of conversation. Because if you want to start an exchange today, right, there's a ton of work. Arthur knows better than most people on the planet of doing that in crypto. And if you can just obfuscate all of that and really just basically plug into an existing tech stack, it saves you a ton of time, and you really only have to focus on user acquisition, which is a very hard problem to get, but a much, I think, arguably simpler one than getting all the liquidity. It won't change our business model much. In fact, it'll probably just give us more venues to trade on, which we like as a trading firm.
Okay. So I did also want to. We briefly discussed the token buyback assistant fund. It recently hit $1 billion, and I saw. So earlier, one of you made a comment that you felt like this was good for the token, but I have seen other commentary saying that. As the price rises, it may not make sense for the protocol to continually be buying its token at ever higher prices. So I wondered, what you thought of that criticism, and whether or not you thought this style of token buyback program will be
I mean,
sustainable.
if that's your criticism, go look at DYDX, right? They were one of the first out there. They had the same vision as Jeff. Very good team. Obviously it was VC backed and what have you, but only started distributing revenue, a year and a half ago? And the token has just gotten slaughtered, even from the low nominal level it has been, even after the fall from the 2021 levels, right? If you do not give away, if you make a lot of money as an exchange, which you should, that's the whole fucking point of this business, and you don't give it to the users, I'm gonna buy another token. What am I here for? Why am I gonna bleed for Hyperliquid if they're not gonna take that money and buy back the token or give some sort of mission via staking? So if that's what you want, go fucking buy a DYDX and be down 95% over the last 24 months, because that's what you're asking for.
Yeah, I think I don't think it's the criticism that the buybacks are bad longer term. I think it's great. Like it gives you a constant I don't want to say floor, but right, as long as the actual product itself continues to make money, which I'm betting on, is they from their client base and kind of trading activity, I think that'll continue to go up into the right. The buybacks basically provide this mechanism to hold it, but B, trade it, because it gives a lot of people confidence in owning this asset that's continuing to win their category, and be a leader in it, for a long-term investment thesis. And now it's fairly liquid. I think there's a lot to be desired still, for Hype Spot itself. I think that'll be fixed over time, and continue, maybe not fixed, but improved over time. And like Arthur mentioned, like you have this community around this token that basically won't trade anywhere else because of the wealth effect they've had, but also be the community around it and kind of future like carrot that's dangled on a stick, right? If you trade here, there's 40% left supply, right? That's earmarked for the community. No one really knows what they're going to do with that, or when it will be distributed or how, but it's a pretty good bet to take that. It's going to parts of it will go back to active takers on the venue. So like, why trade anywhere else with all that knowledge?
All right. Well, last question. As we mentioned, there is competition coming for Hyperliquid. Do you have any? And I know, Arthur, you keep saying like you don't know how this will affect them, but if you had to make a projection, what do you think will happen when we have these other venues that are much bigger? They have like easy on ramps, especially for US users. Like, what do you think will happen with Hyperliquid at that point?
I think that they're going to have to double down on the HIP3 in their true vision, right? I've spoken to Jeff and he said, yeah, I really want to build a permissionless trading platform for everything. And I think they're going to have to really go into that vision, because if if their vision is just, we want to be a very liquid perps DEX, okay, fine. You're still going to make a lot of money. I don't know if you justify the valuation that you have right now in the face of, Coinbase or Robinhood. Like they could go to zero fee trading on perps just because Wall Street's going to reward them for user numbers, not profitability. And so their stock price goes up just because they have more users. Who gives a fuck if they make any money? right? Versus Hyperliquid, they have to make money. The whole point is they make money, they buy back the token. That's why we, as holders, want to hold this thing and buy it. So I think there's a different sort of metric, and they could fall prey to, the Wall Street VC mindset, which is just give me clients, and at a certain point, you're going to turn up the fees, like a Netflix or something like that. Then if I'm Coinbase and I'm Brian or Vlad at Robinhood, okay, fine, 0 fee trading on perps. Let's just destroy Hyperliquid because now they're not going to earn any money. So I think, and then if they don't earn any money, they don't buy back the token. Token holders are not rabid supporters anymore. They'll trade with me because it's free. So again, I think, but again, if you're saying I'm going to decentralize the entire trading stack and anyone can launch any product on anything, because I've provided this very liquid and easy to use platform like a Uniswap for spot, but now for derivatives, I think that's a vision that could really power the token past what I think is this sort of short-term question of what multiple should I pay on these future revenues if I have a very large and competitive US brokerage house offering the same product.
I echo what Arthur's saying. I think, the real end state goal of Hyperliquid is to be this, liquidity layer. I kind of keep bringing up that phrase, but I don't think, I can't speak on behalf of their team, but I don't think they maybe want to directly compete with Coinbase for US users, right? You can't access Hyperliquid in the US today. I also think there's this common theme in crypto that people think all of crypto is just in the US. Yes, it's a big market, but like the world is very big. And I think that the TAM for perps and on-chain trading is actually much bigger outside of the US, and so there's a lot of market share for them to win in the interim before even not having to worry about the US market, but they can focus on all their efforts of tapping into the hundreds of other countries around the world, and then also getting right via builder codes and HIP-3 that tangential liquidity and kind of trading volume and revenue from the US market from people who build right compliant KYC front ends for Hyperliquid in the event that perps do get fully regulated and legalized here in the US without even really having to pay for it. So I think that's kind of, I guess, my take on the future of the protocol. And it's something that's really exciting to kind of be a part of in crypto today.
And actually, just one last question. When you were talking about when HIP-3 goes through, would that create fragmentation and liquidity in any respect?
I don't think so. Right, they're going to be using kind of. Well, the new perps that get listed from whoever's choosing to list it will obviously have to manage and kind of drive their own liquidity, but the other pairs, to my understanding, will not be fragmented. It's just a different front end to access the same order book.
Okay. All right. Well, is there anything I didn't ask that either of you want to mention?
Yeah, I'm all good. This was great. I appreciate the time and good conversation.
Laura, you should hit up Jeff and get some free tokens for us. Come on.
Jeff, if you're listening, Arthur definitely wants some free tokens. He's mentioned it twice now. All right. Well, do either of you want to give out handles where people can learn more about you and your work?
Sure. At CryptoHaze on X and Substack.
Yep. Just at Hanson Birringer on Twitter or HansonB_Flowdesk on Telegram. Always happy to chat.
Great. It's been a pleasure having you both on Unchained.
Cool. Thank you.
Thank you.
Coming up, we have insight into Unchained reporter Jason Brett's latest scoop on the Clarity Act, the White House, and presidential conflicts of interest. Stick around.
Hi, everyone. I'm Stephen Ehrlich, executive editor at Unchained, and I'm here with our regulatory contributing reporter, Jason Brett. Welcome, Jason.
Thanks, Stephen. Welcome.
So you had a pretty big scoop last Friday, and it relates to sort of the legislative process and the future of the Clarity Act, the proposed market structure bill that's trying to make its way through Congress. Why don't you walk us through what you reported?
Sure. So what we learned was the status of the negotiations around the Clarity Act, which is the market structure version of the bill. There's also the ability of trying to regulate stablecoins, and that's going on and getting a lot of the press in the Senate. But the House is also working on a market structure bill, all working toward an August deadline that has been given by the White House that is providing a lot of pressure to Congress to get it done before they typically go on break in July. one of the key points of negotiations that we learned, and really this started as just exploring a little bit more about, what the status was of, are they going to make it by August? Are these, is it going to be stable coins or market structure? Was this very interesting negotiations that we learned of, where there were a quiet group of House Republicans and Democrats that were getting together, and they were negotiating a language around conflicts of interest for, let's say, the president, the vice president, members of Congress, and so on, who would not be able to profit inappropriately from our crypto ecosystem. To me, this was very interesting because, as we know, the House, particularly in the Financial Services Committee, there was a lot of rancor about the fact that our president is profiting off of crypto. In fact, I believe most of his wealth is now from this industry. And they've been wanting to get in amendments into the Clarity Act, which last Tuesday had the markup where they decide sort of what amendments go in the bill and what don't. And the vote out of that committee was 32-19. It was very partisan. It wasn't as bipartisan as, let's say, the House Agriculture Committee. This bill's actually going through two committees, which is rare in and of itself. And that vote was 47-6. So the House Financial Services Committee was really pushing on the president's ownership of crypto and how he might benefit, particularly because he has, as you know, a stablecoin business, or his family does, USD1. And the idea was, what we learned in this story is that both of these groups, the Republicans and Democrats, behind closed doors, said, hey, let's come up with some language that maybe can solve this issue. Not just that would be like telling President Trump, hey, you're doing something wrong, but for the current and future presidents and Congress to deal with the ethics around how we be involved in this industry. And the language was agreed to, apparently, by both the Republicans and the Democrats in this backdoor dealing. And that's what became the real big scoop then, because what typically happens when you negotiate these bills is you check in with the White House, because they do have the veto power, and you hear what their thoughts are. And the White House, from our reporting, showed that they rejected any language at all that would prevent the current president from being involved in this industry.
A couple of questions just to kind of jump off here. What do you know about the precise nature of the language that was negotiated by these different sides?
So we don't know and didn't learn of the language itself, although we know it existed. And I think that's because, to one degree or another, the negotiations are still ongoing. So this isn't necessarily over. It was the version of the language we learned that was rejected. We've learned from our reporting that it might be language around campaign finance or donations to campaigns or political fundraisers, and maybe the precedent of making sure we follow campaign finance laws and extend that to crypto. As you know, there was a lot of criticism, Stephen, about the dinner that President Trump held with his coin, the Trump meme coin, and that if you bought enough of his meme coin, you got to go to dinner. And that's, comes close to the constitutional sort of concern about emoluments where, are you allowing people to influence the president via bribery? So to one degree or another, this language was sort of, how do you put it in? And the way it was described from our reporting was, people were looking with this language to find kind of a Venn diagram of, how do you stop a president or a congressman from benefiting from crypto with this law, and have that in there that would satisfy the Democrats, but at the same time the Republicans don't want to put in something that's like scolding Donald Trump. So it's described as kind of a Venn diagram of what exactly that language is. And that's really become the major question. And I think what they're still negotiating on now is, before the bill now goes to the floor, like what kind of language would be acceptable to a president to sign that is also okay with Congress. And that's the dilemma right now.
I think the real question that I know you tried to answer, and people listening to this will also be curious about is there any language that theoretically would be acceptable to the White House. Again, because of the sensitive nature of these negotiations, it's difficult to know precisely what was in that first compromise. But this is a president through a lot of his, frankly, very blatant profiteering through this industry. I mean, you mentioned before, his net worth is now over $5 billion. More than half of that has come from crypto. Do you think there's anything that would be acceptable to him? Or at some point, I guess what might happen if he says, I don't want any restrictions on my own activities or those of my family when it comes to engaging in crypto related businesses?
I'm not sure there is, at least the way current things lie, unless because it's not totally clear in the public. There's questions, but it does seem like the president is directly connected. Maybe if they took out language, because the language has talked about the president and his family, if maybe they decided to say, hey, look, the sons can do what they want to do or daughters can do what they want to do, that might be a solution. So I think there's an element of, how you refine it. But the problem is, I think once you get to even saying something like it could be a campaign finance violation, right? And you're the president and you're very engaged in this business. The example that was given, Stephen, in the reporting that I liked was, President Carter, which I know is probably dating a lot of people, but, he owned his peanut farm. He was big into peanuts. So like, if you imagine like if President Carter was also starting a peanut business, trying to corner the peanut market as president, if you then gave him a bill to sign that would say, hey, it might be that some of what you're doing is illegal. Like that's a hard thing to ask of a president, not just the president himself, but of the office of the presidency, because that's a business that he's currently would have been currently engaged in hypothetically. So I think what you have is, how do you actually get the president to, under any circumstances, have his lawyers say, yeah, this is okay to sign. It's just about campaign finance. But then the lawyers look at it and they're like, well, but then this would incorporate what he did with the meme coin dinner. So we can't, this is going to be vetoed because it puts the president in potential violation of a law that he's going to sign. And Steve, what's so interesting about this story is there's so many facets that are interesting to me is I don't think we've necessarily faced this as a nation before, where we have a president who may not want to sign a bill primarily because it's going to affect his personal interests and have it be just so transparent to everybody.
Yeah. Just one more quick one before we wrap up. I'm going to ask you to look into your crystal ball a little bit and sort of tell me what's going to happen next. Everybody in crypto knows that Trump wants to sign both bills, the Genius Act focused on stablecoins and the Clarity Act or something like it, to set the rules of the road for market structure before the August recess. Genius Act seems to be moving along as we're recording this. The Senate is set to put a final vote or conduct a final vote on the Genius Act on Tuesday. But it looks like in many ways, market structure is already a complex instrument, and now trying to find a way to satisfy the most important person in the entire process, which is the president, looks extremely daunting based on the reporting that you provided. So what do you think? Do you think we will have a market structure bill passed this year or passed at all? The clock certainly seems to be ticking.
Yeah, I think the market structure is a lot harder to get across than the stablecoin bill. And ultimately, the market structure bill was always sort of behind, like the stablecoin bill is the cleaner bill, but it really only covers a third or even less than that of the overall market ecosystem. So if we're really going to get some kind of regulatory clarity for everybody, we'd want that to be market structure. And I think for right now, we're not going to be able to get it done by August. But you might get it still passed, right? Because at the end of the day, the Republicans have a trifecta, right? The trifecta is the president, the House, and the Senate. So they could probably get a bill done. It might be hard to get through on the Senate side, but then it would primarily be along partisan lines. So my crystal ball is that this issue alone, I think, could be the difference to see if we actually get a bipartisan bill, which from historical, when you look back the last 30 years, it's very rare you have this bipartisan negotiation going on for such a major bill. So I think the stakes are, is it going to be bipartisan or partisan? I think you will see it ultimately get passed by the end of this Congress. The question is it going to be passed where it's going to be seen as like a Republican only bill, or is it going to be seen as Republicans coming along with Democrats? And I think the biggest obstacle to that is having some sort of ethics or conflicts of interest clause in the bill.
So you think that at some point the Republicans might just say if Trump proves intransigent, that they'll just do a straight party vote and get this done, because they technically don't need Democrats, as long as, especially in the House too, they keep everybody in line.
Yeah, exactly. And possibly put the House through on like attached to a bill, so you don't need that boundary of the 60 votes in the Senate. So we might see like end of year attached to some omnibus or continuing resolution type bill where it's just attached on. Yeah.
Great. Well, thanks for joining us. Thank you to everybody listening, and please follow Jason on Twitter and onchain.com for more of his great reporting.
Thanks, Steve.
Thanks so much for joining us today. To learn more about Arthur, Hanson, and Hyperliquid, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Iranovich, Pam Majumdar, and Margaret Correa. Thanks for listening.